I want to get right to this question of where the Fed is now on policy. Jay Powell, of course, spoke to the Joint Economic Committee today. He said the current stance of policy remains appropriate as long as the economy stays on this expected track. Risks remain. You've said basically the same thing recently. So what are you and the chairman saying? You think you've done enough, but you're still on guard in the event that more rate cuts are needed?
So let me talk about my views and how I think about monetary policy. So we calibrate policy to make the baseline growth be sustainable and promoting our dual mandate goals of full employment and price stability. So the policy accommodation we've taken, which has been 3 rate cuts this year, has put policy stance in a very good place to make that baseline come out where we need it to, which is slightly above trend growth and continued move up in inflation to target and further progress on full employment. So I do think of that as the economy's in a good place. Of course, we continue to be data dependent and look forward and look at the risks and see if that baseline changes even with this accommodation.
So is this a pause in the Fed's rate cut path, or is Fed policy? I want to say a pause in we're cutting rates, now we're going to stop and see what happens, or is the Fed at a policy crossroads where you're saying, do we go this way, do we go that way? What needs to happen next?
Can I give you a third option? So my third option is where I am today, which is I see the level of the policy rate right now as appropriate for the economy we have, which is good consumer spending, good domestic momentum, but facing these headwinds, which have hurt business investment and manufacturing. So we are in a moderately accommodative stance, and that's appropriate. And so I feel we can stay in that stance for the period of time it takes to get inflation back up to 2% on a sustainable basis.
So then I would say what I'm hearing from you is you have paused. You've got a policy that looks appropriate. You're watching the data. And what you're trying to figure out now is, well, you're saying you probably don't have to do anything, but you're just as willing to say, oh, inflation's rising, I guess we're going to shift policy in that direction, as, oh, the headwinds have stirred up again and we're going to have to move in the other direction.
Well, one of the things that we have to do is we look forward. And even though I've characterized the economy as in a good place and policy is currently appropriate, we also look at the risks that could emerge. So on one side, you do have the potential for the accommodation we've given to spur the economy and the trade uncertainty settles and the stimulus that other countries have put in place works, and we have some upside potential. But I think on the other side, there's some downside risks that could continue to emerge. We could come out with slower global growth than we've penciled in. We could get a furthering of trade uncertainty. We still have the Brexit issue to settle. So I'm a little bit open to the idea that the risks are on the downside, but right now I see the policy stance we've got as the right one for the risk that we have ahead of us so far.